Hello and welcome to another video by reitspro.com. We are the first and the only dedicated channel for REIT and InvIT investing. We also have a website called reitspro.com. For the uninitiated, REITs are real estate investment trusts. They are equities which give stable and regular returns for the shareholders. They are actually SEBI-regulated entities and they have a mutual fund-like structure. And their basic purpose is to buy, hold, and rent completed real estate. And the rentals that they get from these real estate assets are distributed to the shareholders, the unit holders. In fact, the SEBI guidelines have been notified first in 2014, and they've undergone subsequent changes over the many years, and we are moving towards a more mature REIT and InvIT market today. Just to apprise you of our channel, which goes by the handle at REITspro, would cover a lot of basic as well as advanced questions on who is it suitable for, who is REITs, who can invest in REITs, who should invest in REITs. Basically, they're for stable and recurring incomes, and you cannot really compete with just equity and debt there, and how the returns are distributed in case they are basically called distributions and not just dividends, and why does that happen. Thirdly, if the real estate is rising, what would happen to REITs over a period of time, and so on. So several questions and several videos we've tried to answer on our channel REITspro here. Video is presented by Gaurav Jain. That's me, and you can get a copy of my books here, which is one is on REITs and InvITs, and the other on real estate investment and financial analysis on Amazon, or you can visit our website for more information and links to the Amazon site. We'll be covering the REIT results here, the Q3 23-24 comparisons here, which we would do with respect to the last quarter 2 versus this quarter, and we will also compare REITs on different parameters and summarize all that we've done in this video. So do stay till the very end. The REITs, we have 4 REITs today which are listed, and these are Embassy REIT, Mindspace REIT, Brookfield REIT, and Nexus REIT. You can trade in them just like normal equity shares. And we would cover this with 4 basic points, which is distributions, assets, loans, and promoter versus float that these companies have. Coming to Embassy REIT first, the distribution amount is ₹5.53 in quarter 2, and in quarter 3 it is ₹5.20. So if you compare, there has been a little bit of dip, but they have confirmed the guidance for 23-24 to 20.5 to ₹22. So mind you that the fourth quarter would actually be paid somewhere in April-May. Secondly, the distribution on tax impact is quite minimal, because if you see the interest part is what is taxed in the current financial year. So the interest part is 22% vis-a-vis 24% now. So that's a minimal impact on taxation compared to the previous quarter. And the assets of Embassy are as follows. These were the assets in the Q2, and these are the assets in Q3. So Q3, if you've seen, there has been a little change in the occupancy levels. So that's not a very major change. The NAV is ₹398.86 for Embassy REIT. And the Embassy REIT debt, which we talk about, is, if you see this is for the last quarter, Q2, the debt was about 70% fixed and 30% floating. Now, if you see here, the debt is now fixed is 64% and floating is 36%. So debt cost has gone up a little more. However, as in the earnings call, they mentioned that they would focus on raising shorter maturity fixed debt, because in a dipping interest rate scenario, it's better to go in for a floating rate. So that's why, if you see, there's a little bit of an increase in the floating rate. Now, if you see the promoter versus float, this has been a major change in case of Embassy REIT. Earlier, the public float was 69%, and now it's gone up to 92%. So the sponsor holding has gone down from 31% to 8%. Now, if you recall, if you've been associated with our channel, we talked about the Blackstone exit from Embassy REIT. This is what happened in December, and we made a video on that too. So this is the reason that the float has gone up dramatically. And of course, we have a lot of institutional investors there taking up those shares. Now let's come to the Mindspace REIT. If you see the summary figures, Q2 was the financial highlights were in this box, and Q3 the financial highlights are here. And if you see the presentation, this NAV point is missing. Why is there no NAV? Because legally it's not due in December. So they are, all REITs are generally taking the September NAV figures. That's why they need to get it valued at particular intervals, 6 monthly intervals. That's why it's not there in December figures. If you see the distribution of Mindspace REIT, the distribution in Q2 was something like 4 rupees 79 paise. If you see the bottom line, and right now it's approximately the same at 4 rupees 80 paise in the Q3 period. And the tax impact subsequently is also minimal, because most of the income that Mindspace distributes is in the form of dividends, which are tax free. The Mindspace REIT assets stand as follows: on the Q2 on the left hand side and Q3 on the right hand side. And there's a little bit of change in the leasable area, but no change in market values. And if you see the bottom, there is a detailed explanation of the square footage under construction and future development and so on. The third part is the debt part. The debt part in Mindspace is about 7-8% cost, and it remains the same. But the LTVs have gone up. The net debt figure has gone up a little. That too is not a very major change. So because as it happens, the REITs keep financing and refinancing debt, and subsequently there are payments and repayments as shown here. So the debt part varies a little. Unless there's a huge change in that, we would probably not point that out in our video here. The promoter versus float, if you see the float is also the same. If you see the float, it was earlier 36.5%. Even now it is 36.5%. There's a little bit of a change in the market cap. This would change because of the fact that the prices of the units change. So that's one thing that you can probably take a note here. Third, we come to the Brookfield REIT, and here the distributions are, if you see Q1, Q2, Q3, it's gone up from 385 to 440 to 475. So you'd actually assume that it's a rising graph, but that really is not so if you look at an even earlier figure. So if you see the earlier figure in Q3 FY23 and Q4 23, distributions were on 5 rupees or so. Now it dipped at 3 rupees 85 paise. We also shared a video on that. It is not a rising distribution, and the reason for that was some acquisition which happened, and because of that the distribution was also given out to the new unit holders. So it's a detailed video, you can have a look at that as well. But yes, they have been trying to ramp it up, and expectations are that they will fall in line, the distributions will fall in line in the future. And the tax impact is also minimal. If you see the left hand side, it's Q2, right hand side is Q3. The taxable part, in fact, happens to be this part of interest on shareholder loan. So that's the main taxable part. This is extremely minimal. So about half of it has been taxed in both the quarters of the whatever the distributions have been given. And below you can see if you missed the video, you can see the captioned in orange why the DPU was different and not in line with the earlier years. And the assets of Brookfield REIT are here again. There is hardly much change, though what we do see is that there is a little change in even the WALE, and a little bit of the total area changes are there. And again, the 323 rupees NAV was given in the last quarter, but that has not been displayed for the same reason we talked about in this quarter, but it remains the same till the valuation is done again. And the debt in Brookfield REIT, in fact, happens to be a little lower than the last year. And these are the maturity profiles. And also 76% of the loan, if you see in Brookfield REIT, is going to mature in FY29. Now, what really this means is that if you have, say 87% loans linked to repo rate, then a lower interest regime could have a positive impact also. And secondly, they would not be under pressure to refinance it. And the promoter versus float, again, the percentage is the same. If you see the last time, the promoter percentage was 43.9%. Again, in Q3, it is that this is December 2023, it's remained the same. So there has been no change there. Now let's come to the last one, which is Nexus REIT. So the Nexus REIT distributed 2 rupees 98 paise last quarter. However, please note that this was from the period of the IPO, from the time of IPO to 30th September. It's a longer period. So this the first payout was for an extended time, and now it's 2 rupees per unit. So the composition of the distributions is here, and if you really look at the interest part, that would be the taxable part mainly on in case of thing. One more way you can collaborate this is that if you have got a distribution advice from the REIT, then the TDS would not be deducted on the amortization part and the dividend part. So when the TDS is deducted, that's something that you have to pay tax on. That's just a rough estimate, but we explained in earlier videos how Form 64B would be a conclusive document for you when you get it at the end of the financial year to determine what is taxable and what is not, and that kind of financial year, apart from the capital gains tax, which comes in a different way. The Nexus REIT loans and NAV, etc., are also given as a snapshot here, and the sponsor group holding is 43.1%, and fixed and floating debt components are also outlined on the screen above. So before I go on further, let me request you to please subscribe to our channel. It gives us a lot of encouragement. Also, you can join the WhatsApp group, and the website reitspro.com has a link to joining the REIT and InvIT discussion group. Now let's go on to comparing the 3 office REITs. Now I'm taking the 3 office REITs because that's more of a comparable measure in terms of they are the office REITs and we are not mixing the retail REIT with that. So let's just compare first the distribution versus price versus taxation, and with that screen, you should be able to arrive at the actual yield that is applicable to you. So those are different for different people, and that's why it's very difficult to answer what is good for you and what is not. So that it really depends on what suits you. Secondly, the loan to value percentage, risk assessment, future scope of interest and loan. You need to assess on your own parameters how you assess the loan to value, and because loan does have a future increment possibility if the loan value percentages are low, and you can add more assets. Thirdly, the promoter holding is whether if the promoter holding is large, then obviously the float is low, and the fluctuations in the market would be there because obviously the buying and selling would be more. So on these parameters, let's just evaluate the 3 office REITs. So the first chart is about the current market price, distributions, taxable distributions, and total NAV. Do have a look at this and try to assess. You could have a pause here and see these things. And this Mindspace REIT is not 287. In fact, there's an error here. It should be 370 rupees NAV. The debt is to be analyzed for any REIT. So the average cost of debt is given in the first bar chart, and the second, the below, is the debt to LTV. These are the percentages approximately which these 3 REITs have. So do assess the risk and scope accordingly. The third is the promoter holdings, which determines what the market float is and the subsequent fluctuations. Based on these parameters, you need to evaluate whether there is a future for you as an investor holding a REIT here or not. Thank you so much. Do join the discussion group which we've talked about, and you can write to us, and do subscribe to our channel. Thank you.